So now we can move on and start working toward our financial statements now that we have these entries posted. So first thing to note is that based on the information from the chapters 3 and 4 exercises for the leftorium, at the end of chapter 4 we would have had this following closing trial balance. So this is going to be our starting point when we get into this chapter 5 exercise. Now I want you to also suppose that the following happened for the leftorium in January, and I'm not going to walk through the journal entries, but suppose that we did in fact pay the $500 in wages owed to Rod on January 1st, that the customer that owed us $7,500 actually paid up related to the transaction 5 in chapter 3, that we ended up paying for the office supplies that we purchased in transaction 6. So we paid that $1,200 amount that was in accounts payable. And then when it was time to produce adjusting entries, we accurately took care of the rent and depreciation expense. And this is all just for completeness' sake. And so remember that those last two entries related to depreciation expense and rent expense are actually adjusting entries that would come up when we have produced our adjusted trial balance. What I really want to highlight is the layout of the multiple step income statement when we actually have financial statements. So note that we list sales revenue at gross. So we had initially sold $7,500 worth of items to Mr. Burns, but we also had some items returned, and we had a discount that Mr. Burns took advantage of. And so those were contra revenue accounts. And so on our income statement, we subtract out those separate items to get at an item called net sales of 59.40, which reflects the amount of items that we truly sold during the period. So again, net sales is our gross sales minus any balances in these contra revenue accounts, namely sales returns and allowances and sales discounts. Then once you have net sales, you can subtract out cost of goods sold. In this case, it's $21.60 to arrive at what we call gross profit of $37.80. And gross profit is really, in a sense, the amount of markup that we were able to charge in excess of our purchase price. Then you can subtract out any operating expenses to get what we call operating income. And so in this case we had three operating expenses: wages expense, rent expense, and depreciation expense. And so that gets us down to $1,180 in operating income. And then after operating income, there would be some other miscellaneous items that would get listed below that. In this exercise, there isn't any. So in this case, operating income is just net income. So one thing that I suggest you do is try to work your way through all of these transactions to get to the financial statements, because it might help you get a sense for what's really going on. So that's it for Chapter 5, related to merchandising transactions and then flowing that all the way through to eventual financial statements.